But yeah, this year should just slow down just a little bit. Hopefully it does. Hopefully it does. All right. Well, we are fully live here Sunday, June 29th, 2025. I'm your host, Gerardo G. Money Pies, and this is our Sunday study sessions um, with myself, Gerardo G. Money Pies. And as always, right? We are these sessions are for educational purposes only. Any trade ideas, suggestions, speculation, it's all trade at your own risk. So please trade responsibly, know how to manage your account, and do not trade money you cannot afford to lose. But yeah, this week in review in my opinion, was a pretty good week when it comes to trading and the direction and everything. I was really we had some good results overall, and just what excites me the most, right, is that whatever I guess I teach or present it's right in front of us, right? It is really right in front of us. In this scenario, I'm going to show you guys the the speculation going in a bearish scenario. Normally, I'm always kind of showing on a bullish scenario, but in reality, guys, I literally all I'm looking for, okay, is an impulse down. I guess again, the right, I'm still trying to not like I know it, but I'm still trying to kind of create I know it subconsciously, but it's like, how can I create something for you guys to so we can all follow through and duplicate. But all I'm looking for, y'all, the way the market moves, right? Okay, we all know the market moves impulse correction, impulse correction, impulse correction, right? That's how the market moves in a bullish scenario. In a bearish scenario, down, up, down, up, down, down. Okay. Remember, for to me personally, I don't um I don't I don't slow down for consolidation. What I mean by that is that I don't try to focus on consolidation. There's always a trend somewhere. Okay. There's always a trend somewhere. All right. Because if this market was going downwards, right, like this, and it does this, people are starting to call that a range. Well, it's not ranging, it's still in a downtrend. It just it did get well, it did get stuck in that range. But I try not to get caught up with that because this range could have just been two ranges, it could have been three, it could be five, it could be a lot of things, right? So, but again, because the market is fractal and it repeats itself over and over again, there could have been little trends here that we would have saw intraday, and we could have took a little buy there, or there could have been little trends here in that range that would give us confirmation to sell. All right. So that's why I always try to focus on this. Okay. I always try to focus on this. And to continue on, um, you know, I'm always looking for the impulse. Okay. The impulse or the strong move comes in various ways, right? It's the impulse down like this. Sometimes it could be like this, in a structured way. Boom, like that. And sometimes it's a candlestick to the downside. Okay, sometimes a candlestick like so. And even nowadays too, right? It's our box system. Our box system can also be, something that helps us analyze the market a little bit better. Okay. Sometimes the box system. Okay, the box system is telling me that we're bearish based on the those three things. Okay. So again, though, once I see the impulse, okay, that's where the Fibonacci retracement tool comes in. Let's see, as you say, the market is fractal, so even if it's ranging in a higher time frame, most often it's enough movement. Yep, and that kind of goes more with gold and eco. Again, I guess with maybe like maybe the forex pairs, because I don't trade them as much consistently intraday, daily. The forex pairs just to kind of shit, they do range, they do range, but trading that US 30, trading that NAS, trading gold, those pairs that move a lot. I mean, there's opportunity on an intraday level on those lower time frames, you know, and it works out pretty good. But yeah, guys, that's literally kind of what we're working with right here, right? This is if I'm looking for sales, I'm looking for one big impulse, or I'm looking for a structured impulse, or I'm looking for a bearish candlestick, or I'm looking for a the box system like this to give me some confirmation. And then from there, the you know the Fibonacci comes in. Measure that move. Okay, measure that move. High to low, low to high. This scenario, right, we're working with bearish scenarios, so it's in that direction. But yeah, that's literally all that I focus on, and what's been helping me a lot, right, is just understanding, how just using the fib so often. It started to repeat itself even more, right? We got an impulse here, and we know when price gets to the 23%, it's a proper pullback. Let me read this. Okay, so a a complete retracement, we need at least some wicks above the 23%. My One of my first forex mentors, I think his name is Curtis Cobain, K. Um, he he said that he wanted a close above the 23%, meaning a candlestick closing above the 23% in order for it to be a proper pullback. But now that I know more information now, it's like if I measure a swing high to low on a 5-minute chart, it's close. But on a 15-minute chart, it may just be a wick, right? So long story short, I just think if it touches 23%, that's a proper pullback. Okay. Just touches it, it's a proper pullback. So 23%, enough pullback. We need a 272, negative 272, okay, to be a proper extension. Okay. So TP1, actually no, TP1 is 0. Okay. TP2 is the negative 18 extension. And then the negative 272, it's a proper lower low, or a completed lower low. Okay. A completed lower low. Right. And even with this, right, if this is the impulse going downwards, and you ask yourself, well, where do you enter? Should you wait for the 38%? Should you wait for the 50%, 61%? We never know. Okay. We never know really where is it going to go. But I think if you let's say we entered at the um in between the 38% and the 23% at that price level, and price goes higher to 51%, and your stop loss was at 50%, and then it goes and actually does the movement that you want it. Why do we lose this trade? Can anybody tell me? Why do we lose this trade when it did exactly what you wanted to do? And the answer is right in front of us. Why do we lose that trade? Oh yeah, Nico. because we had a stop loss. That's the reason why we lost that trade. Okay. That's the reason why we lost that trade. Because if you didn't have a stop loss, you would have won it. Like that's, I mean, I'm not suggesting for us to do that and not put a stop loss. But the reason why we lost that trade is because we put in the trade order a stop loss. Okay. Now, granted, capital preservation is a priority. And Dr. Latrice says with no stop loss, could you don't lose, could have lost it all. I mean, yes and no. If we're over leveraged at the a 20 pip drawdown, yeah. Okay. And I guess I'm guessing with this is a good conversation, good way to explain things. Like again, I'm not suggesting don't use stop loss. Okay. All I'm saying is that I guess back to the James Clear quote, right? When you know those simple movements so well that you can perform them without thinking, we are free to pay attention to more advanced details. Okay. The simple movements and that I'm trying to explain now is get the movement right first, right? Get the movement. Train your eye, train your habits to see the movement. The little details, the little advanced details is the stop loss. Every time, a lot of it, one of the very first questions that people ask, oh, where's your stop loss? Where's your stop loss? Okay, before you ask about where's the stop loss is, have you have you identified the impulse? Do you agree with the impulse that I'm choosing? Yeah, see that, guys? Are you confident, as Dr. Fuchs said, who is in control? If you're confident with who's in control, then you're more confident in where you're going to enter, right? And you're confident in kind of letting your stop loss take some punches, or your stop loss, your account take a little bit of drawdown. And that's actually what happened, I believe, for me on, was it Wednesday or Thursday? I got stuck in some drawdown. But I won the first sell we had on gold, but I got stuck in some drawdown that I didn't want to. But because I was confident in the impulse, I held my ground. Because I wasn't over leveraged, I I had enough margin to not kick me out. Ready, guys? Okay, and then very nice there. Thank you for sharing that, Nico. Since I opened my new account at the end of April, only had two losses. The only two trades had a stop loss. But truth behold, I had endured deep drawdowns, not for the yeah. And then from there, Nico, it's yeah, not over leveraging, but then you start getting used to that drawdown. Like, oh, it's not so bad. I've been here before. You know, I've been here before. Curious to know if it would hit your stop loss if it actually wouldn't go in the direction you had planned. But all right, guys. So yeah, so if I see an impulse, a big impulse, that's how I measure it from high to low. For that example, when I see a structured impulse like this, okay, I actually measure it from. Let me give you guys this. Okay, so oops, from high to low, that's where I measure the that impulse. When we have a structured impulse, I actually do it from this lower high to lower low. Okay, that's where I grab the fit from here to there. Okay, and same the story repeats itself. Whenever I have a candle. I mean, the candle's easy. It's the same movement as that. Okay. From high to low. I mean, this is my favorite, one of my favorite plays, right? The anatomy of a candlestick is one of the most important things that there is to trading. You know, and you got the high price open here and it closed here. Okay. The new candlestick will open at the same area where the previous one closed, correct? And then we were basically waiting for price to go up, maybe touch 50%, come back down. Okay, maybe get a wick at the negative 18 and close. That's basically what we're looking for every single time. Okay, right there. Like that. And then the box system, right? The box system, that one, that's just the same thing, right? It's an entire movement of the last 17 hours from high to low. And we just simply just measure that as we always do. Right now, the box system is only being used on the 1 hour and the 5 minute chart. Okay, but that's how I've been measuring it like this. 5 minute, 8 o'clock. Okay, and more specifically, right at 8 o'clock in the morning Central Time. Andrea, welcome in. Who else just got in here? Carrie, welcome in, Carrie, and Mr. Ron White. All right, guys. So yeah, that's how this is measured. Okay, the simple movements over and over again. I'll share a quick screenshot of this. Okay, perfect. All right, yeah. Well, so let's review the market like this. Okay, let's review the market we just learned. And let me go to the 4 hour chart on a sessions indicator scenario. Hopefully your session started working now, Nico. There were some updates, I believe, with this, so just be mindful of that. Okay, here we are. So obviously the big box represents the previous week. Okay, and then all the price action here is what happened during the week. Okay, let me go to an hour chart, and I'll hide the daily higher time frame candle for now. Perfect. Pretty. All right, so yeah, here it is, guys. This is we're basically reviewing kind of 2 weeks ago. Okay, this is the previous week. This is last week that just passed. This is the week prior. So if I go back to the hour chart, or even 2 hour charts, fine. Okay, this is an entire candlestick. Okay, an entire candlestick. Let me go back, and that's that candlestick right here. And check this out, guys. Okay. I am gonna, because of the bearish candle, I'm gonna measure this bearish candle from high to low, just like we did, okay? From high to low, we will measure this bearish candlestick. Like that. Okay? From this candlestick alone, guys, okay, we can literally have a setup. Entry at the 38%. Let's put a stop loss at the, you can put it at the high or wherever we want to put it. Entry at 38%. we'll put it at 78%, and then we'll take our profit at 272. Actually, no, negative 18. Perfect. I'll check in a minute, Dr. Juice. I'll check. There were a few gaps, I think. There have been a few gaps a few weeks ago. It will be dependent on the chart, though, but I'll check for sure. All right, so there it is, guys. Okay. So that's one candlestick on the weekly time frame. Let's add the next week. There it is. Price goes into our area of entry, and it actually took, there it is, take profit. You guys saw that? All we did, we just made our decision, or not made our decision. We considered this as a control movement, right? Regardless of what this candlestick said, this, and this, we looked at this candlestick. We decided it was a control candlestick. And this can work on the 1 hour chart. This can work on the 4 hour chart, or 4 hour candle, excuse me, 1 hour candle. This can work on 15-minute candlesticks. This can work on 5-minute candlesticks, right? That's all that happened. Okay. See? And yes, now to your question, Dr. Chase, in this scenario, yes, price open here, closed here, correct? In this scenario, price open here and then close here. It did not close at the same price level. So yes, absolutely. One little trick that we just discovered is if you click and hold on there, see the open was 3440.48. Excuse me. The close was 3368.750 for this candlestick. For this one, the open was 3383. 3383. So yeah. All right, move along. Yeah, I do like the little feature right there. I used to normally stare at this, but not anymore. That's all I need to know. All right, let's rewind back again. Okay. So that was just kind of like a set it and forget it move. Okay, now let's fine tune this thing. I already got the week measured from high to low. I got a possible entry at 38%. Okay, so now let's go down to the 2 hour chart. Okay, and here let me just kind of push it a little bit. There it goes. There it is. Perfect. Okay, so inside of that weekly candlestick on the 2 hour chart, that's how it looks. Okay, all it is right now so far, it is one impulse. It's not, there's no structure yet in there as much as I would like to see. There isn't. Okay, but again though, right? Hit play, and there goes the movement right there. Price opened, closed around here, it gapped up, went back down, pushed back up, just missed 50%, and then all the way went down, and and touched the extensions to make that a proper lower low. So this was a lower low based on the weekly candle, and also based on structure. That's a high, that's a low, that's a lower high, that's a lower low, right? So we got this impulse, this correction, this impulse. All right, so now I can start my fib from right there. Boom. Okay. And we got a proper pullback, right? Because we went above the 0.236. Okay. So now here in this scenario, we do the same thing. Okay. Let's enter at 38%. Put a stop loss in 78%. and our take profit like this. I think it's a similar setup. You hit play, and there it is. And that's how the week closed, just like that. So as you guys can see, I don't make this stuff up. I just focus on the movement and try to make the best of it. I think on the 1 hour chart now, okay, those are the simple movements, right? That's the simple movements that I try to focus with every single time, right there. And now let's kind of work on those little details. Okay, like why the price, um, why the price did not sell right away? Why did it take longer? Things like that, right? So this was the high, this was the low, impulse pushed up, hit the 38%. Remember that 23%? Price came below here. Okay, I was looking for some sales around here. I believe it was a 30-minute BEC. Okay, right there. And I think there's also like news. I think FOMC, Chairman Powell spoke a lot this week. Okay, not that he reversed it, but again, with all the news that happened, what did price just simply do? All price did was did an impulse. It retraced back to 50%, and it sold. Would you guys agree with that? That's all that happened? If we were to explain it as simple as possible, as simple as possible, that's all it did. It did an N wave, high to low, retraced to 50%, and sold to the extensions, right? So that's the simple movement that I'm trying to make sure you guys see it. That's all that happened. So how does this look? Let me hide the indicator now. Remember, this fib won't change. This entry won't change. Okay. Let's just see how things look from the fib to the right on different time frames. Let's go to the daily. Okay. On the daily, let me do this. Let me go back to the 1 hour time. I just want to make sure I don't lose these points on a higher time frame. That's all. Okay, those 2 points represent where I started to fib, high to low. Okay, and we'll put an arrow here where price turned. I'll just put it right above the 61%. Okay, everybody good so far here? Okay, everybody good so far? Because I'll be changing time frames, so I don't want to lose anybody. You have any questions? You should be able to unmute yourselves or just chat it in. Yeah. Everybody good to go. All right. So let's go to the daily time frame. Let's see how everything looks here. Let's look at those advanced details now. So the fib is the same from this high point to this low point, the dots, right? And where's my arrow? I lost my arrow. All right, there it is. All right. So why did price turn around right there? Well, maybe one can say that this big push here, okay, there was a the little fair value gap scenario. Price came back, balanced it out, and then it reversed. You guys see that? So for those of y'all who don't know how to read like those fair value gap scenarios, we'll give you guys a quick lesson on that right quick. Okay. The market always needs some type of closure or like some type of equilibrium. Okay. So whenever, but sometimes the market also too needs some expansion. Okay. So the market needs strength for that. Okay. And the strength is those fair value gaps. Okay. If anybody's gonna say the F word, it's only me, the teacher. Nobody else can say the F word. Just kidding. Balance and coverage. I like that. So, um, so Nico, what's fair value gaps? They're also fractal. Um, and they repeat themselves on different scales. So in this scenario here, um, I don't know how to start this.
It's easy. You go from the wick of the previous candlestick to the wick bottom. The bottom wick of this candlestick starts the gap, and this one ends the gap. So when you have a situation like that, that's considered a fair value gap.
Mm-hmm. Perfect. That no, for sure.
Yeah, that's.
That part, I got it.
I was
uh,
wondering if you're trying to find a simple way to explain
no, no, no.
it.
You're good. I was trying to see. No, no, maybe you can still tune in and help me with this.
Yeah,
Um, it's a candlestick, right? Needs to be balanced out from the left side and the right side, right?
yeah,
So and then so if we look at okay, let's look at this cat. There he goes. That's what I needed, Dan, right there.
that's
I needed a visual of this. So here, if we look to the left, okay, there there is no little gaps in there as Dan showed, right? There's no everything's covered. I think Dr. Latrice also typed it in. Yeah, balance and coverage. I think that's a good word as well. So there you go, Dan. Right, as you were saying, right? This wick here and the candlestick to the left of this candle and the candlestick to the right of that candle. Okay, there is no coverage there, as Dan mentioned. Right then, and then from there, you can finish it off now, Dan. What were you saying?
yeah, no, that's perfect. So, and what I normally do is I'll take that when I box that off, I'll put it like a the halfway line on because the what I even learned from Donnie Phipps is that fair value gaps like at least 50% of the fair value gap is a good turnaround point or the back wall, just like a um consider it like an equilibrium zone. Look at it the same way like an ATM candlestick.
Yep. Good point. Good point.
Uh,
And yeah, so that becomes. Oops. Headphones unplugged there. But you guys see how we're worried about. Not worried. Excuse me. You see how now we're focusing on advanced details. Okay. But we gotta, in my opinion, we gotta get the simple movement first, right? I don't mind the advanced details unless we have a good foundation of you know the the simple stuff. Okay, because the advanced details will just kind of give us confirmations. And I think out there in the trading space, the education trading space, people think that learning the advanced details is what's going to give us the ultimate edge. But in reality, the ultimate edge, in my opinion, is on the simple movement. Okay. The simple movements are protein or our most healthiest thing to read. Everything else is just seasoning salt, just to add flair to that simple movement. Okay. But yeah, so a for this gap to be filled, we need a wick to touch there, technically. But as Dan mentioned too, the 50% is also good. And what Dr. Latrice mentioned, um, it becomes an area of interest, which is true. But at the same time, right? How are we going to use that area of interest? Well, it begins from the control, right? Well, where's the control? Well, this is a more of a control candle. So when price gets in this area, we think we should be thinking sells, correct? We should be thinking sells because we filled the gap of a bearish candle or of a bearish move. All righty, guys. So let me do that back again here. And that's exactly what happened. Price filled the gap there, or the imbalance or the fair value gap, and now we are down. Okay, now we're down. Yeah, that's it. So that's how it looked on the daily time frame. Let's see how it looked on the 12-hour chart. On the 12-hour chart, we had a drop base drop. And it never touched the ETM candle. You guys see that? But it sold. So Tommy, T Money in the house. It never touched it. Now, at the same time, right, this is a nice control candle that also left a little fair value gap. And this one, it did not close. Yeah, see that? Let's keep that. Let's let that happen on the 8-hour. Let me see those trees. It did. Yeah, I think that's the big gap right there. On the 8-hour chart, one thing that I really am using a lot, and I think this is how I got the move on Thursday. I wonder Thursday. No, it's Thursday. Yeah. I'm liking price touching the from the 4-hour guys, 4-hour, daily or weekly, the opening. When price goes to the open of price, the wicks go to the open of a previous candlestick, more specifically the 4-hour, daily, and weekly, there's a lot of volume there. And it came to the open of the 4-hour, of the 8-hour candle, and it just boom went down. Alrighty. And even this candlestick right here, it's like, hey, you missed the move here. Okay. But what did this candlestick do? Let me zoom in some more. Okay, we missed this move, the top wick. But this candlestick right here, it went up, it wicked up to where? It got some volume from the open of that candlestick and boom, turned around pretty massively. Now you have to wait because this was an 8-hour candle. But then it gave you 8 hours of profits. All right, let's see how the 4-hour looks. Same thing with the 4-hour chart. Okay. This was an open candlestick here, came in and boom, dropped it. 2-hour chart. Okay, this is not the best drop base drop, but you can say that it came in and got in that area. There goes that gap, Dr. Latrice, that you've been talking about. Price has not filled it yet. Could we come back and fill it at some point? All right. We'll keep that in mind for the speculation that we do here in a minute. Okay. So let's see how it looks on the 1-hour chart. Nothing too much here that catches my attention. Let's go to 45 minutes. One thing that I'm noticing now, right, is uh Ms. Letitia's favorite move right there. 3, 4 candlesticks, right? On the 45-minute chart. I don't know if it was the same on the 1 hour. Yeah, there we go. See, on the 1 hour time frame was 3 consecutive bearish candlesticks that needed some kind of balancing. They came to them and then it drops. Let's go to the 30-minute time frame. Nothing there. 20, nothing there. One thing that we can say here, okay, is wouldn't you guys say there's a little bit of consolidation right there, right? Which at the same time it can be like a drop-based drop. Price came in and balanced that out a little bit, and then it drops. But again, guys, let's not forget the bigger picture. What all just happened? Impulse, correction to 50% and down. Correct? That's all that happened. Do you guys agree with that? See, now we're just we went down the little rabbit hole and just trying to find some more, reasons to layer a confirmation on top of it. All right, so we're gonna keep this little circle there for this fair value gap. It is catching my attention. Okay. Um, and then yeah, let's see how this drop happened now. Now we're gonna be studying this drop right here. This drop right there. Okay, so how now we're gonna be focusing on from the arrow to the right hand side. Alrighty. Um, and let me turn on the indicator again. There it is. I'm gonna remove this fib. So again, right, this is Monday, Tuesday, Wednesday, Thursday, and Friday. The way the indicator is set up, it won't give you, well, the way I have it set up, excuse me, it won't box in the current date. Okay. So when the market opens up at 5 p.m. Central, we'll get a box here. Alrighty. So to me, remind me, Dr. Latrice, about the gap there. So I'm gonna turn that off just so I won't get lost. Make it easier to read. But Monday was a bearish day. Okay. Tuesday was also a bearish day. Okay. So that entire rectangle is Tuesday. Okay. That entire rectangle is Tuesday. We can fib from high to low on Tuesday by itself. Everybody got that? And in this scenario, right, we can just been like, all right, you know what? I'm gonna enter at 50% stop loss at the high of the previous day and my take profit at the negative 18 extension. And there it is, guys. Earlier, we did the entire swing. In this scenario, right? We just did Tuesday. And what had happened? All happened is that price went to the 78% of Tuesday, and then it sold. Institutional level. Are you guys ready to dominate these markets? Is the chart movement, is it really that difficult, guys? Based on how I'm explaining it. It seems pretty simple, right? And that's the reason why I try to keep it as simple as possible, right? Simply because it gets complicated when we trade it live. Wouldn't you guys agree? Emotions kick in, fear kick in, everything else kicks in. But if we keep training ourselves to find it as simple as possible, guys, right? it just gives us more confidence to attack. That you, Tommy? They're gonna say something. Never mind.
I'm ready.
All right, man. All right, so let me hide these drawings. Let me see these indicators right quick. Should not, we can keep them there so you guys can see it. Let's kind of just focus here. So this is the high, this is the low of that Tuesday. All right, Wednesday, it was just kind of a tricky day. It wasn't really much there. Okay. Why did price go to, here? Okay, why did it go there? But even before it actually sold off, right? It came down, it touched the 23%, and then it bounced up, and then it went down. Alrighty. Yeah, drop base drop they're forming as well. But check this out here, guys. All right. Check this out. All right. So here we are. Monday, Tuesday, Wednesday. Monday, Tuesday, Wednesday. We're speculating for Thursday. Monday, Tuesday, Wednesday. We're speculating for Thursday. If you are only looking left like that, it's gonna be very hard for you to read momentum. Yes, this is left, but isn't that left as well? Isn't that left as well? So based on looking left, the most recent left, Monday, Tuesday, who's more in control? The sellers or the buyers? Based on this, to the sellers. Alrighty. So check this out here. Wednesday closed bullish. Okay. This bullish day does matter. Okay. It's a whole day and it closed bullish. So would you guys say this is not you guys say this is still a bullish candlestick, right? If we measure that candlestick from low to high, this is a good fib, right? I mean, this is following all the rules that we learned about using the fib, right? You find your low, you find your high. This is a bullish day, and it's a proper fib, right? Where do you guys think if price can so on Thursday the day is complete when price hits the extension. So technically the next day, the job of the next day is to complete a higher high based on the previous day's closure. All right. But because we're more bearish, if this day completes early, I can also sell like that. You see that? That's a good move to take. And there it goes. I'll tell you the truth. There's a lot of moves that we took based on morning star, evening stars, all this week. Just FYI. ¿Sí viste por ahí cómo funcionó eso? A lot of moves. I think actually, you know what? Friday's buy was based on a 20-minute morning star. Correcto por extensiones. Y igual, si medimos de acá arriba, from high to low, es el 78%. So see, the extension, actually, so the actual extension that it touched here was the 38% there. But at the same time, it was a 78% of this swing down. No, it's been a crazy busy month. My wife's back now, so things are back in control in the house. Single parents, I don't know how they do it. Okay. So that's how that worked. All right, you guys. So this is there. Okay, beautiful. Okay, so where was I on? All right, you guys. Let us we'll review what happened on Wednesday. Excuse me, Thursday. We'll review what happened on Friday's closure, and then we'll speculate further for this week ahead. All right, guys. So we got about 15 more minutes. Any comments, questions? We're free to bring them in. No problem.
I do have a question, please.
Yes, absolutely.
Just a few minutes ago, you mentioned that the movement, when you were looking at Wednesday, Thursday, I believe that the movement was not complete until, it reached the higher extension. And I'm sort of lost on that one a little bit.
Okay, perfect. Yes. So based on this is dealing specifically, Nico, with the daily candlestick. Okay, just the daily candlestick by itself. So, and this is so this if this is a daily candlestick like this, okay, and this is the open, and this is the close. The new candlestick will obviously open where the previous closed most of the time. Okay, and then when price, and this is the high, excuse me, and this is the low. We're probably going to get a wick down here first. So this wick is a pullback to 50%, right, of the previous one. So all the next day, all it's trying to do is make a higher high. So the moment it actually goes and makes the higher high, technically the day is over, right? That the current day, which is this one, this example, it's completed the movement based on the previous day. So back to this example here, this was technically, well, not it was a bullish day, right? It was a bullish day because it closed bullish. So price completed its movement by making that extension touch. Right there. It's complete. Now, we could have said it was this one. We could have said it was that one too, right? But again, the once price makes that higher high, it's done. Now, I would have traded to that higher high if we would have got a lot lower, right? So again, right, all we're looking for is impulse, correction, impulse. When price makes a higher high, what comes next? A pullback, right? Whenever a candlestick opens and closes, and then the next one makes his wick to the top side, That's basically it. The high was already created for there, and then either if the price is really bullish, it'll stay like that. But if not, we'll kind of get a wick. Um, so those are just ways. Those are just ways to put the brakes on continuing the move or not, right? Continuing the move or not, or taking profit, or just simply waiting for the next move. So hopefully that explained some of the question there that you had. But because Monday and Tuesday was stronger, and in London, and this was London during London time, like, oh yeah, that was a good one to take. All right, where are we at here? It's just Thursday. All right, perfect. Yeah, so this is Thursday. That the Thursday happened here. Let's rewind back to Thursday at 7 o'clock. That's kind of when I'm looking at charts for the most part. All right, so on Thursday's price action, okay. This is at 7 o'clock in the morning, I believe, on the 1 hour chart. Yeah, it left the drop base drop. There it is. Okay. Visually, Dr. G's for sure. There's definitely way more volume right there compared to this. See, we had a drop base drop right here. The higher high is complete. Because this hit the extension, what was it? Negative 0.382, right? It already made its push up. So it's very unlikely that it will go even further, right? So technically, that was all that was needed there. But even from here, guys, right? Drop, base, drop. I mean, we all know how these are played. And then just took profit down here. I believe we caught this move here, the first move from high to low. I thought price was going to continue trending from there. But unfortunately, right, it actually went a little bit higher, and then it ultimately sold. So again, though, right, why didn't it trend was simply, right, it took out if the previous, and these are notes these are notes that I'm adding along the way to maximize profits. Evening Star, Nico, I think that's what you meant. Yeah. Evening Star. So it's like it's hard for price to trend when the previous day was bullish. Notice here, right? This day, beautiful little trend. Why? Because the previous day was bearish. Here, the previous day was bullish. So it's going to be a lot harder for price to trend. And taking profit at the low of the previous day was a way to do it. Buying from here was possible, but you could say that it grabbed the liquidity or the low of the previous day and it pumped up. But to me, that doesn't, that's more of a counter move than an actual trend move. But in this scenario, right, the volume was there, and it came to this. Now it came to this 30-minute BC right here, supply BC. There it goes, and there it went. Okay, so this is Thursday, right? Now here's a very interesting part right here. Okay, this is something that where sometimes the pullback doesn't come to us. So previous day closed bearish. What do? You measure it high to low, like that. Technically, the day closed at our pullback level. You see that? Price closed at the level of the retracement. 38.50%. Okay. So sometimes when price closes above the 23%, above the 38%, near the 50, there's not going to be a pullback. You see that? And there wasn't. It just dropped.
G, una pregunta.
Adelante, por.
Entonces, cuando hay un día como el miércoles que no rompe ni máximo ni mínimo, ¿lo podríamos obviar y utilizar el día anterior? Básicamente,
Exactamente.
para esperar.
Exactamente.
Obviar esto y esperar el retroceso y el take profit ya buscarlo aquí.
Ujú. Sí,
Y luego aquí veo esto que me llama la atención, ¿no?
sí. Ese lo ves como un morning, como un evening star.
Sí,
Sí. I'll repeat this in English, guys, here in a second. But yes,
sí.
sí, Paul. Pues básicamente, este es el patrón de inside bar, el patrón embarazado.
Embarazada.
Sí. Cuando el día este de aquí, es que no sale para ir para abajo. Entonces, el control todavía viene de esta vela. Entonces, esta vela va a estorbar un poco, pero si mantenemos el Fibonacci de aquí a aquí,
Ujú.
esperamos, porque tiene volumen, porque este día sí fue bullish, tiene
Yes.
volumen para llegar al 78% de este escenario. Y después ahí, el primer take profit era aquí,
Ujú.
un retroceso, pero se puede llegar hasta acá.
Perfecto.
Mhm. Yeah, so he was basically asking about, the inside bar, right? This pattern here is that inside bar pattern, the Haramani pregnant candlestick. So again, right, I'm only focusing on the control candlestick. So this candlestick is the control. This one is not. Okay, that's not. So it's kind of like, it's a accumulation day, I guess you could say. So for the most part, right, we just worry about the control candlestick. And obviously it's one full day of nothing. Price gets to the 78 and then it just drops. And a good TP from there. Pero también por hasta las extensiones se puede llevar bastado a este día.
Ajá, sí, correcto.
Llegó hasta allá. All right, let's see here. Yeah, here price. So see price this one Thursday. It price closed at the retracement levels already and just massively sold through all there. Okay, sold. All right. What's next? What's next? Oh yeah. So then we'll close it out like this. Yeah, so this is kind of where we were talking about earlier, Dr. Latrice, where we were looking for buys to close the day, even though we were so bearish. But we were basically looking for a morning star pattern or an engulfing candlestick. And we got it right there. Nice morning star pattern. I'm assuming you approve. Okay. But the question is, okay, how do we trade these? Well, same thing. Okay. Once you see this pattern stick here, you measure a low to high because that's the control that we're trying to go to. Okay. You can enter at 50% with your stop loss at the low and your take profit at the extension. Okay. And then there it goes. Now in this scenario, right? In this scenario, price actually wicked up there. And this is kind of, it goes back to that example, Aniko, that you were saying. You see how price kind of already made the high first from the previous candlestick and then it dropped down? And that kind of like, even it can be done on candlesticks as well. But the current candlestick is trying to complete the movement of the previous candlestick. And once it kind of completes it at the extension, it'll come back down. And then we have a proper touch at the 272 right here from this move. But yeah, morning star pattern. And I believe during the live trading, there goes the morning star movement. It left a rally base rally right there. And then the best entry would have been down here at the rally base rally. It only touched the wicks and it took off. Just like so. There you go. So let's focus on to see what's going to happen for the remainder of the week. All right. And we'll close out the session. All right. And we'll go like this. All right. So previous week. Actually, can't. I think he changed it. This indicator will no longer. Yeah. Okay. All right. So I'll go to the weekly candlesticks. Oh, that's true, right? Morning star followed by a rally base rally. Okay, so that's the previous weekly high. Okay, here's the previous weekly low. This candlestick catches my attention at the open. Okay, that to me is a good target. Remember, there's a lot of volume there. Okay, a lot of volume there. Previous weekly open. All right, that's a good area for us to consider. All right, let's measure this candlestick right here, high to low. Look at that, guys. No way. No way. Almost perfect extension.
Wow.
Okay. Perfect extension at the previous weekly open. So we close below the 23%. Maybe we want to wick at least to the 38, and then we can bring it down. Okay. So let's continue looking. We got there, we got that there. Daily. Let me adjust my fib here in a second. All right, perfect, guys. So let's there goes the push down to the 12 hour. Let's see the 8 hour. All right, hold on. I've been liking the FXCM chart more than the Lambda recently. Let me just see which one has the better candlesticks. I am gonna go with, yeah, I'm gonna go with the forex.com. Okay, let's do this again one more time. Previous weekly high. Previous weekly low. There goes this one's open, has no wicks. Okay, I'll take that. It's a good target for me. Because it's previous weekly open. And I'll go to the 4-hour chart to measure that movement. From high to low. Okay, perfect. That's a good area there. And look, inside of that weekly candlestick, right? Remember, that's the high and that's the low weekly candlestick. We also see nice little structure there, 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 and there. You see that N wave structure? Very nice N wave structure. So we can get a pullback maybe there. 38% of the previous week, which also lines up with these previous weekly lows. There'll be a lot of little resistance from there. We can get price to turn around. All right, so let's see how it looks on the 2 hour. Oh, come on, make it easy here. Nice little drop base drop. Two-hour drop base drop. Okay. Maybe it wants to go to the low of these previous days. You see right there. Wouldn't you guys agree with that? All right. And we covered it all, right? On this 2 hour chart, we have some imbalance right there, no? Some fair value gaps, as they like to say. Let me use Dan's strategy here. Oops. 50% fair value gap. You see at the midpoint of the M. Okay, there goes Dr. Tree's M's right there. I think that's the one you're talking about on trees. Hopefully I'm right. Okay, yeah, it's a nice little M pattern there. A little fair value gap above the 2 hour. Okay, and we'll just kind of keep going down the rabbit hole a little bit more. To see if I find anything else that catches my attention. If not, that chart to me is always, oh, there it is. Inside of a fair value gap, I always tend to find a drop base drop. Okay, that's a very nice drop base drop on the 10-minute chart.
Yep, that's I do. I like that as well, and I think that drop base drop would be a good entry zone.
Mm-hmm.
Yeah.
All right, let me finish up with this, guys, and we will wrap it up. Okay, so we got the previous weekly fib there. Now I'm just going to use a fib on from the lower high to the lower low, like that. And that area, all that area that we have our interest is right in between the 61 and the 51 and the 50%. So it's a very, very good movement that we can capitalize from. Okay.
Which is right in line with the 1, 2, 3 strategy.
Oh yeah, man.
That's so simple.
So that is the speculation for the week ahead. Yeah. And we wrap it up. All right. We are done for today's session, guys. We'll return back next week with our live trading schedule. And yeah, appreciate everybody being here. And we'll end this week. Hopefully everybody has a great week, trading week, and we'll keep in touch in the chats throughout the week. Make sure you're also in that Telegram, the Yes or Yes Academy English Telegram. There I'll try to communicate the charts a bit more. Our inner circle WhatsApp. That one is kind of more for these private sessions for Wednesday, Friday at 9 a.m. and then Sunday mornings. Everybody have a great weekend.
One quick question, G. Is this recording is going to be in YouTube?
YouTube, yeah.
Be...
YouTube. Yeah, the when we have our private sessions, Ron, they'll be on YouTube. I'm a little behind. I'm adding some of those recordings. These last 2-3 ones, I'm a little behind on those, but this Sunday one will be up there immediately.
Okay, so I've been trying to find that June 19th recording. So you're
Okay,
behind on that.
Okay, let me write that down for you, Ron, and June 19th.
Yeah, that's where you were explaining this box system. I missed most of it, but I want to go back in and get that. And you were
Was that a
explaining
Sunday?
was on Friday, that holiday, June 19th.
Okay, I'll look for it on my records there and I upload it ASAP.
Okay, I appreciate it, man.
My pleasure.
Thank
Everybody
you.
have my pleasure, absolutely. All right, guys, we will wrap it up. Thank you guys for being here. Hasta luego.
Thank you.
Hasta luego, gracias, señor.
Hey, Dan, you having your training, right?
Yes, this afternoon at 3 p.m. Central Time.
All right. Hopefully, I have that video. I want to look at it before I get in your training. All
Okay.
right, buddy. I'll see you then.
All right, see you then.
All right.
See you guys.